Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
G'day, how you going? Welcome to the show, and it's one of those special installments of the Smart Property Investment Show where we share warts and all our journey as property investors. Portfolio update is what we call them. We've been doing this now for nearing a decade, I believe, since we first started investing in property back in 2011. And it's a big focus for us moving forward on smartpropertyinvestment.com.au, just to keep you connected and in tune with the portfolio that we have created, how we continue to evolve and shape it, philosophy towards investing, what we're doing right, what we're doing wrong, and just how we see the world as we navigate what is, and I hate the terms, unprecedented times with all this COVID-19 stuff. Someone that's been integral to the development portfolio, Steve Waters, he's director of Right Property Group. I've wrangled him into the studio to help me navigate what is the latest on the Smart Property Investment portfolio update. Steve, how you going?
Great, good, mate. Thanks for having me back. Good to be here.
Are you going to ask me how I'm going, knowing that
I'm not really interested.
No.
How are you going, Phil? You keeping well and safe?
I'm angry because of this property that I've got here that we're going to chat about today.
Love it.
I really want to get into it because, as I said, and the philosophy in many ways behind why we created Smart Property Investment was to tell the real stories around property investing. Steve, you've been in this game for a lot longer than I have, and you only hear the stories of people becoming bazillionaires overnight through property investment. So we said, hang on a second, we don't think that that's actually true. Yes, it is a good wealth creation tool. Yes, it's something that most people should pursue as an asset class. No, it doesn't happen overnight. So this is part of that journey, and we're sort of nearing a decade. I think we're 8 years into this now in building out this portfolio. We've done pretty well. I've spoken about it before. It scores pretty well. There's a lot of stuff that we haven't done well, and that's really what I wanted to have a chat about today. It's a particular property, which I'm going to call it a dog in our portfolio. It's up in a suburb called Kingston in Queensland. But before we go there, the last time we got together, Steve, and I'll do an update on this at a point in time, was looking at the cash flow position of the Smart Property Investment portfolio. Go and check it out, smartpropertyinvestment.com.au. One thing that we indicated was, and in discussion with our accountant as well, Manzarul Khan, it's a good portfolio. It's a good capital growth portfolio, not so good on a cash flow side of things. So one of the discussions the last time we got together to sort of do a strategy update, portfolio check-in stuff, was not much we can do on the revenue side of things, but there's some stuff that we can do on the expense side of things. And the biggest expense for most property investors is interest repayment. So I've been going down a pathway of renegotiating our rates without having to refinance with a number of lenders. I've got through 2 of them now, and I think I sent you a text one
Friday night. You were pretty excited.
Pretty happy. Was able to, for I think it was four, I can't remember, it was 4 or 5 loans with one particular bank. It was a really easy process for me to give them a call and say, hey, my rates are out of market. I'd like something a bit sharper. And I pretty much got a percentage off each of my home loans. So that was
an enormous result.
It's a huge result. And I think that alone sort of saved me, I don't know, 17 or 18 grand. I can't remember the
that was more than
annually. So I'll share that full story once I get through to it. It's one of those things where I got to sit there and go, like, that was a really easy process. It was with one particular lender, and I'll share who that lender is when I go into details with it. That was very easy. It was very simple, and I was really impressed by the way they handled it. It was all over, done and dusted in half an hour. Then I did the same again with another lender where I had sort of 3 or 4 loans, and it was probably one of the most painful processes I've ever been in my life. And so I'll share who that lender is as well. Warts and all, I don't really care. But it was a hideous experience. I was on hold, I think, for an hour and a half, even speak to someone. And by that point in time, it was 6 o'clock in the evening. So they went, oh, well, everyone's going home now. So I wasn't very happy, and I wasn't very happy.
Yeah, what you should have done is recorded the conversation that you had with me after that hour on hold. That would have been some pretty good listening.
I think I had the language of a sailor at that point in time. But anyway, so hold fire, wash his space, stand by. What you want to do? I'm going to get through this process. There's a few more lenders to get through. But I think the target or goal was trying to save sort of 30, 40 grand, Steve, on the portfolio. I think we might be able to do it. So that's going to completely change the cash flow position of the smart property investment portfolio. One other thing that can really support the cash flow position of the smart property investment portfolio is on the revenue side. And one of them is that I've had a place in Kingston in Queensland, which I reckon since I purchased it back in May 2017, if I've had a year of rental income on that property for over that period of time of 3 years, I reckon I'd be doing pretty well. This thing has not been good. I'm going to call it a dog. And I really want to get into why that is the case, Steve, today. You're very familiar with it. You've been helping me trying to navigate what's wrong with this thing. I don't think necessarily we bought the wrong property, but maybe how I have managed the property is where it's really come undone. And which is, you're familiar with the process. Did it come undone? Has it come undone? It's been pretty crap, right?
In terms of a revenue point of view, it's been horrendous. In terms of the management, well, that's probably what we're here to talk about today.
Yeah, and management happens in many ways, and we speak a lot about controlling your portfolio. You know, portfolio not being a passive investment, it's something that you need actively. And, you know, I've dropped the ball on this a bit because in many ways it's just got too hard, right? But let's have a quick chat about Kingston. Kingston is part of the Logan Shire, which is southwest-ish Brisbane. We've got a fair bit of property in that area. I think you've got a fair bit of property in that area. At the point of time of purchasing this, it was a bit of what we perceived a bit of a diamond in the rough. It was priced pretty well. Kingston itself, median quarterly growth most recently, and this is off smartpropertyinvestment.com.au. Just do suburb search, you get all this information. Median quarterly growth, 2.45%. Median 12-month growth, negative 3.31. Median 3-year growth, negative 4.1. Median 5-year growth, 6%. 10-year average annual growth is up at 0.43% at the moment in Kingston. That's interesting. Median advertised rent is $335 and time on market 82 days. Gross rental yields of 5.96. If you saw those numbers today, would you be investing in there?
If you relied upon the data sets, you'd probably convince yourself to go elsewhere.
Yeah, you probably would do. So we've been on this for 3 years or so now. What do we buy? It was what do you call them up there? It's not a
high set.
A high set. So it's a high set that's been filled in, right?
Yeah, so no, it's still classified as high sets.
High sets.
So 3 bedrooms, 1 bathroom, kitchen upstairs, 1 large bedroom, and call it a breakout room with a kitchenette downstairs with the potential to add a secondary income out the back.
Yeah. So what we saw was a good yielding play with some capital growth, 790 square metres, built in 1983, high set. If you've been in property and you know anything about Queensland, you'd know what this thing would look like. We paid $290,000 for it back in May 17. Current debt on it, $332,213. That's costing us $855.95 a month in the mortgage, fixed interest only at 4.34%. So this is one of those ones I still need to renegotiate. It's on the high side. Current valuation circa $330, $330K. So a bit of equity in it. It should be one of those meat and potato properties that I shouldn't have to worry about, but it hasn't been that, has it?
No, it should be. I like the way you put that. It should be meat and potatoes. Yeah. Not so much a set and forget, but certainly consistent. If we go back to the data sets for a minute, they're really interesting numbers because, and we often talk about this, that data's just, it's a set of numbers at the end of the day. It doesn't necessarily mean it's right or wrong or any indifferent. But if we look at the other properties in your portfolio or some of the other properties in your portfolio that sit in and around this one, if I take mine, those numbers that you've read out wouldn't reflect what we have achieved and what we are achieving.
No.
Nonetheless, we need to understand that there's multiple different types of properties in an area which can affect the averages, because that's what it is, up or down or sideways. So always get to the bottom of the ground truth, if you will, on the data sets. But this property has been a problem from month 6 of ownership in some way, shape or form, whether it be via a tenant, a dodgy tradesman, management, the list goes on, and it's just in this cyclical loop of underperforming at this stage.
Yeah, it is underperforming, and a lot of it is due to how I've actually managed the property. So let's chat about the sequence to end up where we are today. We'll just go to a break beforehand. Back in a moment.
Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent, Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with Steve Waters, portfolio update. We're chatting about the Smart Property Investment portfolio and what has been a poor performing asset of ours, a high asset property that we have in Kingston and Loganshire in Brisbane. Acquired it back in May 17. Now, it was okay for 6 months. We had tenants in there pretty quickly. I think we originally had to do a bit of work. I had quite a lot of crap around there, and
it was overgrown.
It was overgrown.
Yeah, and a few little bits and pieces.
It's had a gate out the front that was broken, and it was a bit of a compound, right? So it needed a real good tidy up, clean up. We got some tenants in there, and we had to spend a few bucks on it to start with, but and that was to get it into a rentable position to attract some tenants.
Yeah, so originally it was an owner-occupied house and it had gardens and brickwork.
Really well looked after.
Yeah, it was low. And then they sold it and they rented it out to an investor bought it, they rented it out, and everything just became overgrown, but the bones were there. Then we purchased it, we gave it a haircut and a shave, and I think that's really where the start of everything going south in this particular instance was. And what I mean by that is that the tradesman who was fully insured, fully licensed, that did the work, turns out to have not done very good work at all. And there were ramifications of that 6 months later.
The path. So the tradesman, I remember there was walls to be plastered. There was general cleaning up and stuff around the backyard. I think there was some water leaks in the roof upstairs. There was some deck repairs that needed doing. There was some railings that needed extending. It was a proper
kitchenette downstairs.
And when it was an owner-occupied residence, it was a really good nick and really well loved. And I think someone might have used the bottom as a home office as well. So we've got a tradie in there to do this work. And cosmetically, it looked okay. But we didn't realise until a couple of months later when there was some torrential weather in the Queensland area, and obviously Brisbane, you would expect this sort of stuff. A whole bunch of issues really come to the fore, and we probably weren't quick enough on the uptake to get it fixed. So tenants had moved out. We had to get it fixed. I think it would languish there for 2 or 3 months while we're waiting to find the right trader to come in to do the work for us. And by memory, Steve, that included sort of undoing some of the hodgepodge extensions that had happened over time where they'd extended a wall out under a deck, but that deck was leaking and we had to pull it all back in.
That was from the initial tradesman. So what had happened is, and just for everybody listening, is when you get a tradesman to do your work, if it's superficial work, meaning that what you see is what you see, well, there's your evidence, but what you don't know is what they've done in the walls, because that's behind the wall linings. And that's what really, or the roof for that matter, when you say it's been fixed and there's the photographic evidence, you really don't know until, and that's what's happened here. And so we had one of the torrential storms that they do get up there, and the water ingress from the roof into the eaves, therefore into the ceiling, then started to damage the gyprock ceilings, run down, and the tenants said, we're out, we're gone. Then the next tradesman came in to rectify what was some dodgy work. But the one thing that didn't get fixed was the roof. Not because he was dodgy, it just wasn't on the scope at that point in time.
So the problem we have now is that this second tradesman, as in the second bit of work, remedied the first tradie's work and did a pretty reasonable job, installing new wall, undoing some of the renos that happened on the property, patching and painting. They fixed the ceiling by memory and a whole bunch of other stuff, which was good. It looked nice. New tenants moved in. They seemed happy for a little while. Another big storm happens, and the issue around the roof and the guttering exacerbated even more problems, and that just is where we are right now, isn't it? Where those tenants have moved out and there's water damage upstairs, there's water damage downstairs, there's a wall that's fallen apart downstairs. Some of the work that was originally done needs to be redone again because it hasn't happened properly. The shower downstairs leaking, and there's problems with the walls there. There's tiles falling off as a result of water damage. I think the ceiling has dropped again downstairs. Upstairs, there's water on the floors. There's, water's gone on the carpets. It stinks and stuff now, so no one wants to stay there. So how are we going to fix this problem?
Now, the water on the carpet was the first.
It was the first time.
So let's go back a bit to the roof and some of the things that potentially the listeners can be aware of if they're purchasing a two-storey house. So when you purchase any property for that matter, hopefully you're getting a pest and building inspection. And unfortunately or fortunately, very few inspectors will climb onto a roof of a two-storey house because it's just outside the scope and OH&S and what have you. But they do their best, whether it be via drones these days, to get some really good footage or eyes on the roof. But nothing really ever will give you the right indication unless you're physically looking at it and touching it. And so what we have is a roof in this particular instance, which is the second story, that has over time been adjusted. And what I mean by adjusted is that the original owner tinkered with it in some way, shape or form, and there's a piece of wood up there and a sat dish or whatever it may be that is making water pool. And when water pools on a roof and the gutters are in, let's say, not the best condition, it gives an ingress point for water to enter the building, and that's what's happened this time, which has undone all the work that was done beforehand.
So how do we remedy and rectify this? Is it going to be an expensive exercise? And maybe we share what we've gone through so far to work it out. We got some initial quotes and
that was out of this world.
We're being told to replace the whole roof, right?
Yeah, so what two tradesmen wanted, and roofing tradesmen for that matter, wanted to replace the whole roof, circa $20,000, I think it was.
Good job, isn't it, to get?
Yeah, it's a great job. Now, we had suspicions is too strong a word, but it just didn't sit right, with you or with me for that matter. So we got another person out there, and trying to get roofers and tradesmen in Queensland at the moment is near impossible. In Brisbane region, it's near impossible. And as it turns out, what was told to us what needed to be a roof replacement, turns out it doesn't need to be a roof replacement. There is just some, without being too technical, there's some depressions in the tin roof because of what's sitting on top of the roof from the old owner that is causing water to pool. Some of the tech screws have rusted out, and the gutters, clearly, which we knew about. So it could actually be, instead of the $20,000 roof replacement, we're talking circa 20% of that.
Yeah, which is a much nicer number. So have we settled now on our approach to getting this remedied and rectified? The most recent correspondence around it is that, look, it needs to be done. The property manager, we'll have a chat about that in a moment, of how that sort of worked with them. But there's some quotes that we've had around fixing the stuff downstairs, the wall, the water damaged wall, some of the tiles, and I think we've approved for that to go ahead. But there's no use doing anything until we get the roof fixed, right?
Correct, because if we have another seismic storm, well, then we're just chasing our tail once again. And so this is not putting the cart before the horse and making sure methodically we work from the top down, literally.
Yeah. Okay. So we're ready to go then. We'll prove this work on the roof. Is that the idea?
Yep.
Yeah. Okay.
Correct.
And we're talking a couple of grand to fix that, right? They're just got to replace
for the roof point.
Component of it.
Once again, not sort of giving any building advice here, but something as simple as a rubber washer on a tech screw can be the beginnings of a very unpleasant experience if it's not fixed and attention's not given to it immediately.
Yeah. Okay. And what do we need to do with the gutters? That's another issue we've got, right?
Yeah. So the gutters need to be replaced in sections because there's a lot of rain in a state like of Brisbane or Queensland for that matter. You just want everything working as it should and deflecting water away from foundations and roof and eaves and what have you.
So we were told by the original roofer was that the roof was paper thin.
Correct.
And therefore needs replacing. So what we now know is that roof sheets are not paper thin. There is not proper support beams and joists under. So when you work on it, it sags and it will collapse. So need to add beams and joists. Sheets are nailed rather than screwed.
So that's very old school.
Not all, but most. And where the nails are loose, water is getting in. Surface rust to tin sheets. The previous owner put a length of timber back from gutters to attach some kind of mesh screening. This is catching dirt and leaves and contributing to rusting. and concrete pad outside door, downward slopes towards the door. So when it rains, the water fills up against the door. So these are pretty practical solutions.
Yeah, and that's interesting that, once again, you would never know unless you went onto the roof, which is what this tradesman did, and rightly so, whereas the others just sort of climbed a ladder and looked at it. So when you have a tin roof, of any age for that matter, if you keep walking on the wrong parts, then it will sag. You'll indent the roof, which then catches water and pools, and then there's your ingress point. So someone a long time ago has walked over this roof and put a dent in it of some nature. And once again, the dent doesn't have to be this swimming pool size thing. It could be just a couple of degrees variation or ingress. And that's what we've got today. And that, along with potentially the timings of the work, have contributed to where we are today.
So we'll get the roof fixed, we'll get the guttering fixed, and then we can get the internal stuff done. So
which isn't a lot.
It's rent ready, and hopefully we can get someone in there. Yeah. Should be the. Yeah, I don't even know what the garden looks like at the moment. I imagine it's a bit of a shambles there because no one's.
No, I think one of our guys went up there not long ago and did the video
and some work on it.
Yeah.
So look, it's not a good position for us to end up, and I'll take ownership for us being in this particular situation. But my argument would be, whether or not the property manager has supported me as well as they could have through this whole period. We'll have a chat about that. We'll just go to a break beforehand. Back in a moment.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome back, everyone. Phil Tarrant with Steve Waters, portfolio update, chatting through the Smart Property Investment Show. Now, Steve, the property manager up there. I reckon, there's two sides to every story, and I'm very conscious about that.
Probably three sides to every story.
Three sides to every story. If I was in a defensive, and I'll put my hands up saying, look, this hasn't been done as well as what it could have, and it's because of me. But if I was in a defensive mode, I would say, well, property manager didn't chase me hard enough to get this sorted out. Property manager maybe hasn't understood my financial situation and not pursued this as well as they could have. Property manager should have shown greater leadership in getting this sorted out for me. Property manager has asked the wrong tradies to come in there to give us solutions for this. Property manager has scoped the work incorrectly, and therefore this process has taken a lot longer than what it should have. That's me being in a defensive position. I'll put the shoe on the other foot, and it would be, Phil Tarrant, you can't get a hold of him, can't get a decision out of him. He's slow. He doesn't understand the hard work that we've been doing to try and get this rectified, i.e. as the property management company. We've gone above and beyond to try and get tradies in here to quote this up, et cetera, et cetera, et cetera. Two sides of every story. So what's the third story? What's your view of it all?
Combination of both is the third side of the story. And look, there's probably a little bit of truth in both sides.
Yeah.
At the end of the day, as investors, we pay our property managers to manage the property and be that conduit of information back to us. How hard they chase us, knowing how hard their job is, I suppose, is a day-by-day
job.
It's a tough job.
Yeah,
it's a tough job.
They do property managers are critical to our portfolio, and I'm absolutely pro property manager. I'd hate to manage a property myself.
Oh, it's the worst job in the world, and that's with full respect. But we also, as investors, can't relinquish responsibility. And while we all love out of sight or no communication or no news is good news, in this particular case, no news was not good news. And if we dig deep, there might have been some wrong email addresses and incorrect phone numbers as a result. And that has prolonged the timepiece from the beginning to the end.
And whose responsibility is that? There's a question to ask. And knowing about this, I would also say, and if you're a property manager listening to this, don't use a generic email address. Use your own, because stuff just gets lost in people's inboxes. The way I like, and the property managers that I work effectively with, they know that if you call me up, there's a good chance I won't pick up the phone because I'm doing something else. The good property managers know to text me with a thing that says urgent, you are losing money, can you do this straight away? And they'll get an immediate result.
I was just about to say that, and because I'm not potentially the easiest person to get a hold of either as a landlord, and that's not because I just see a property manager and don't answer their call, it's just that physically I'm a little bit busy. But when they text me saying urgent, you are losing money, or urgent maintenance request, as in safety, that gets my attention. But if you email me or if you ring me and leave a voice message, I may not get to it for quite some time.
Yeah. And this comes down to, number one, empowering your property manager to do their job effectively. And I'm not having a pot shot against the property management firm who's looking after this. I think they've done a pretty good job, and I'd be pretty frustrated with me if I was them. So this is definitely not a beat up, but this is about an understanding of how to manage a relationship and the need of the property investor to dictate or determine the best way to get the best outcome for the property manager to do their job. And it just comes down to good communication and setting the ground rules at the start of it.
It does. And I think everybody has their own medium of communication, what works best for them. So tell your property manager, this is how you can get a hold of me.
Yeah.
It may not be the traditional method. It may not be what Jack or Mary want, but this is how you can get a hold of me, so that then you can establish a good relationship. Because at the end of the day, they are doing a job which entails them looking after your hundreds and hundreds of thousands of dollar asset.
They're an asset manager.
Correct. They are an asset manager. But the avenues of communication need to be very open and clear. And the other point, taking it away from a property manager for just 1 minute, because it is a very hard job, is that you are reactive to preventative maintenance as an investor. And often we react to urgent maintenance, but there are certain elements of maintenance that will not necessarily need to be done now, but it will save you a lot of money in the future.
Yeah. I've got some property managers up in Brizzy, and you'll know the one I'm talking about here, Steve, who it feels like every day is telling me of some other maintenance issue that needs immediate resolution. There'll be something like, there's a screw's falling out of the hinge on the gate. We need to send someone around to fix it. And I'm like, it's just got to the point where I just ignore them, right? Because I just go, what is it again? What is it this time? Your job is to manage my assets. I'm paying you to do it, a percentage of the income that I receive. You work for me. You don't work for the tenant. So if the tenant calls you up saying, there's a fly and a cobweb in the roof, can you send someone around to fix it? You say, no, do it yourself. There's a leaking tap, do you know how to change your washer yourself, right? The PowerPoint's fallen off the wall. Okay, get someone out there straight away. Fix it straight away, right? So you've got to set the ground rules early on. And I find this particular property manager quite frustrating, but I've never really, I don't think, expressed my opinion a lot around how I feel as a manager, because I just go, it's just too hard. But you know what? Every single 3 months, every single 6 months, I'm getting a statement. They're very thorough. They're very compliant. They cross the I's, dot the I's, cross the T's. So there's a lot of benefits of it as well. But it'll be like, a branch has fallen off the tree and it's hanging over the fence. We need to send a gardener around there. And I just feel like going, just get the person that lives there to get the thing, break it up, put it in the bin, job done.
Get that 12-foot extension ladder, climb on the roof and take that branch off. No, but look, to be fair, for me as an investor, I want to know all of that because I want to make the decision. I want the responsibility of saying yes or no. I don't want my property manager spending 1 cent without my authorization.
Yeah.
Now, sometimes that's a bit of a headache because they can't get a hold of me. But, here's something that we've talked about in the past because things get lost in email chains. I'm an advocate of creating an email account specifically for your investment portfolio, and that's the only communication that goes into that email account for the properties.
That makes sense. We have the same thing here, right? But then, that doesn't get monitored or mapped. And
you've got 400 email accounts.
Just going back to the property manager that looks after this property in Kingston, they have my appreciation for what is a tough job, doing this, and things could have gone better, but it doesn't really matter at the end of the day. We're in a situation which is now going to be a lot more expensive for us as a result of this. So, trying to blaming people for, whether it's myself, I don't really care, for where we're at isn't very productive. It's about what do we do now to actually remedy and rectify this and move on.
And move swiftly.
Move ahead and move swiftly. So we've got to get these trades approved, and we'll do that through the property manager. And someone in your team's been very helpful in this regards as well, Steve. So thank you. Just got to get it done, get it sorted out. I need someone in there paying me rent.
Yeah. That's the name of the game.
That's the name of the game. So that is the goal. That is where we're at right now. So look, I hope that's a bit of an insight into what I'm sure most people have got a problem. Once you get sort of a larger portfolio, you've always got one of these, which is you just never feel like you win. You never feel like you're getting ahead. There's always problems. There's always issues. So you know what? If you want to invest in property, get used to it because that's the name of the game as well.
Because you have seasons of repairs and maintenance. It is never smooth sailing in terms of that. But I think something that you said earlier on, which I think that the listeners should really appreciate, when you first started the creation of a portfolio, your whole mantra was it is warts and all. This is not always plain sailing, and we want to report as what it really is. And you've done that from day one. I never forget this, and you should go back and watch the videos, the listeners on the SPI Online, is you rolling out turf out at where was that? Cambridge Park.
Yeah.
So it's warts and all. It's not smoke and mirrors, and I think everybody should appreciate that.
And also, the buck stops with me as well. You've known me long enough, Steve, that the reason why we're in this position is because of me. It's no one else. Someone needs to be responsible, and the person that's responsible is the person that owns the property. So
at the end of the day,
so I definitely could have done this better, and we definitely shouldn't be in the situation that we're in right now. And it's just going to cop us. You get double whammy, right? I got to pay for renovations, and I've also had a property with no income coming in. That's not good. It's not good for cash flow.
And you got a high rate fixed.
And I got a high rate that's fixed at 4.34%. Can't do anything with that as well. So look, $800 is the loan a month. I think the rent on this was $350.
Yeah, it's $350. Yeah,
$350. It should be a good property.
It should be a completely different picture in terms of its cash flow position.
Yeah, and it's not. So watch this space. We'll check in once we get all this sorted out. Look, happy to share this story. It's, what not to do, but take away from this what to do, and that is take control, take action, do something about it. Don't let it sit there and fester, because it's only going to get, good English word, worser than what it is right now.
It never gets better.
It never gets better. That's good. By the way, I had talking about, and I just want to reiterate, this is definitely not a beat up at all of the property manager who looks after this property. Is more of an apology for being hard to deal with more than anything. So keep up the good work, keep at it. And if you can continue to help me through this process, that would be really handy. I want to get someone in there as quickly as possible. But I had one of our properties, not Cambridge Park, in Mount Druitt opposite the Westfields there, had a call from our property manager there yesterday, pretty much saying, hey, the tenant has called up first thing this morning, your hot water thing's blown, it's leaking, there's no hot water. They've been in that property for like 4 or 5 years. I got a quote to get a new boiler in there, immediately, because it needs all refixing and stuff, $1,000. And I went, okay, just do it. It was, all pretty reasonable. But that's about reacting quickly to this sort of stuff.
Well, it is. And to be fair, that was the one that was fully renovated in a weekend, wasn't it?
In a weekend,
yeah. So that's had pretty good longevity out of that.
Good longevity. The same tenant, because that person, remember the person moved out when we did it. We put all their stuff in a removals truck, locked it up, renovated it, moved it all back in.
In a weekend. Made it brand new. Have you still got the video online?
Yeah, it's still there. Yeah, you can go and check it out. It's a good thing. So anyway, that's portfolio update, smart property investment. Steve, thanks for your time today. Very enlightening.
Pleasure.
Yeah, just get this stuff sorted out.
Just get it done.
Just got to get it sorted out. But if you like this discussion, look, there's a whole bunch of other podcasts we've done around our portfolio. Just search on smartpropertyinvestment.com.au portfolio update. You can go and check it out, where we chat about this sort of stuff. I'll do an update shortly on how I've gone in reshaping the expense position of the portfolio through renegotiating interest rates. And if you're thinking about doing this, and irrespective of my original remarks about one of the lenders being an absolute pain in the backside to deal with, I highly recommend it. Don't shy away from it. And the process I've been going about is just going in there saying, hey, my rates are out of market. My mortgage broker is looking to refinance the properties in my portfolio. I can get a much sharper rate. Here is an example. Lender X, apples for apples, are giving me this. Do you want to keep the business, or I'm happy to move to another lender? And every time they've gone, what can we do, Mr. Tarrant, to keep this business? So
you might need to get to the retention or pricing team.
You do. And some of the lenders have them, some of them don't. They say, we don't have that. We don't have a team like that, they'll tell you.
Well, at the moment, they may not.
Yeah, they might not. Yeah. But just make sure, just escalate. But don't be an idiot about it. You've got to be friendly and you've got to be smiling. If you push and prod and be a bit of a nuisance, they're just going to tell you to go away. So
you'll be hung up on, and you'll spend the next 2 hours on the phone again.
So charm and friendliness trumps aggression every single time. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.